I may not stay through the whole thing though, Paul.
Yeah, that's all good.
But like I
Okay,
said, when you see Maureen, please just tell her I won't be able to
sure. Yeah,
stay on. We
absolutely.
just came in to cool off.
Yep. Okay, I think I'm ready now. Now let's go save this chart and bring it to the main one. All right, let's start off with silver and gold. Yeehaw.
Hold on. Sorry.
All right, here we go. Silver. I've been talking about this area of consolidation for quite some time. And we created this high here, and that is, you know what, that actually can be adjusted to this point. And so this area of consolidation right now is where we're at. This dip down here, this coincided with the stock market crash the little mini crash that we had there at the beginning of April. Since then, it has been climbing back up, but it's been having difficulty getting above this point of resistance that we're at right now. If we were to, yeah, I mean, my speculation, my bias is that it's going to go up only because we're seeing more and more of the silver contracts that were all paper based, gold contracts. The pinch is occurring where people are realizing, hey, you know what? I better actually cash out on these paper stocks. And gold more so than silver. But when they go to cash that gold out, the the obligations are not going to be met. Someone is going to miss out because the number of paper stocks that are being sold on gold are like 300 times how much gold there actually is. So the volume of gold that they've been selling on the market is greater, 300 times greater than the volume of gold that's been mined and minted, brought above ground. So when that fraud lets go, silver and gold are both going to skyrocket because it will be so rare, and all of those people that bought and couldn't get, they're not going to be able to get it, and so it'll be even more expensive. So this is a slingshot effect almost, and I like it because it's going to result in, silver is going to be probably 1/10 the price of gold. Well, when we take a look at right now, the price of gold is at 336 US. Is that right? Yep. 336 US, and silver being at 33.32 US. It means it takes over 100 pieces of silver, ounces of silver, to get an ounce of gold. And I plan on actually having my silver buy me gold later on because now I'm actually getting ahead of the game with my silver. Just have to close this over here. It's kind of distracting. So the gold that, so yeah, silver and gold prices right now, they are um, being as manipulated as they are. We're going to see breakouts, I would say, here within the next few weeks. And the reason I say that is because Dario, his name is Dario on X, and he's got a website, justdario.com, and uh, he's he was actually talking about the paper contracts on gold and silver this week, and he's coinciding this worldwide pinch where nations are looking to repatriotize all their gold. And at the same time, we have other nations like Japan, for example, just issuing as much fraudulent paperwork as they possibly can, notes, currency, just to maintain their obligations with the US markets. Now, I've said this before, but this is a continuing phenomenon that is going to result in a crash of some sort. Now, we are looking at this chart here. This is the Dow Jones International, or also known as the US 30. It's a major index to measure the strength of the market. And as we can see, after this crash that occurred, this coincided with the silver, the drop in the prices in silver. Well, this has been climbing a lot, and that's only because of inflation. They just keep printing. There was $5 trillion lost here. And the only reason this has come up is because people are believing things that Trump has to say about the markets and how good things are. And this money here, this money that came back in and raised that market capitalization, this is all printed. So it's fake. It doesn't actually exist. And so what we're seeing is not a reflection of the value of the market. This is a reflection of the devaluing of the currency. Now, what we're going to, I believe what we're going to see next is a fallout, but it's going to be short-lived. Things are going to look good for a while. This coincides with the whole transitionary period that is being talked about by the financial elite. They're saying, yeah, we're in the transitionary period. It's not a recession. Well, this transition is the digital transition. So they're taking all of these markets that are all based on time, and they're going to be replacing it with markets that are based on data. The entire all commodities are going to be based and backed by data. I'm having a hard time getting my rhythm here this morning. So when that occurs, it's going to look good because people are they're getting more, they're putting more data in, right? And so that data being so productive for big tech, for we've got the Googles and the Metas out there that are taking our data and analyzing how it is that we purchase, and even so much as programming how we purchase using social media. And of course, algorithmically, they're also changing the, oh my God, I'm having a hard time. I'm going to cancel this. I mean, nobody else is here. I'm not going to do the live stream. I'm just going to hang out and do it more conversational. Sorry, guys. I don't know what it is. I had good sleep, got lots of sun. Things are just discombobulated right now, I think.